Hello, today we look at reflation and reflation trades, and we will see how we believe the current consolidation or the consolidation that we may see over the next few days is, in our view, only temporary. We'll start with the chart of the euro dollars. This is an hourly chart. When we came on the 23rd, we were signaling that the euro was possibly oversold. We have since seen a reaction up. This reaction up has reached the lower end of our corrective targets. Tomorrow there's an important speech from Draghi, from the ECB. We will have to focus on what he has to say about possible tapering into the new year. We believe that this corrective move up may already be finished or could linger on another few days, but would see strong resistance above 108.59. Indeed, in a more long-term or medium-term context, here with our daily chart or the perspective over the next few months, we believe that the current downtrend on the euro is not quite finished yet. We do see oversold conditions. We have seen stress on our envelopes where they were touching each other during the month of November. We have seen our risk index being oversold, but in essence, the downtrend still seems to be in place with our trend analysis and target analysis, and we could possibly retest lows into January, early February. On a longer term base, we believe that we're slowly getting towards a point of exhaustion of this downtrend of the euro. We did indeed try to correct up between 2015 and early 2016. We have since been in a resumed downtrend, but this situation is already oversold on a long-term basis. So we believe there's probably one more leg down into February, but possibly towards the second half of next year, we could see the euro continuing its correction up. To summarize it, well, we're still in a corrective up bull, so in a basis, we would want to say, on the weekly. The daily could still push a bit lower over the next month or so, and the hourly is correcting up, a correction that could last a few more days, but in essence is going to resume its downtrend to join the daily over the next week or so. Now it's interesting to focus also on the dollar index. We look at here at our investors view, so all three charts on one page, and we could see that the long term is slowly getting exhausted too and is in an overbought situation. Similarly to the euro, but inverted, the daily is still heading up, would still have a bit more potential, and following the intermediate top we just had, could still have the leeway to move a bit higher into early next year, meaning into January or early February. On the hourly, we have a similar correction, just inverted. This is a correction down, and it could still work its way down over the next week or so. We would see strong support around the 99 levels. Another reflation trade that we have seen since the election of Mr. Trump has been the S&P 500. And here we could see that it came in an environment where the weekly chart was still heading up. It does seem quite expensive in terms of our targets, and we believe there's probably not that much potential left. That said, our risk index is not overbought yet, so we believe it could still push a bit more into the new year. Looking at the daily, a similar situation, not much potential on our targets, but a risk index which is still fairly in the middle of the range and turning up. So we believe also here there's probably some leeway to move a bit higher into the new year. On the hourly, we are in a consolidation, which we could probably call a sideways consolidation for now. We could see that we're still overbought here, despite the bit of weakness that we saw last week. So we could probably envisage a bit more work here over the next week or so. Looking at the long-term treasury bonds, or the TLT iShare 20-year treasury bond ETF, we see a similar picture, just in reverse. Reflation has had a strong impact on bonds. Our trend is still heading slightly up, but we could see that we had a very nice overbought top in the middle of this year on the risk index. The daily is now heading lower, and similarly to the euro, we could see that this downtrend probably extends into early next year. It's slowly getting oversold, but it doesn't seem quite finished yet. On the hourly, in sync with the euro, we could see a bit of a continuation of the slight consolidation that we've seen, especially that we are coming out of a strong oversold condition. Now looking at Brent, which has been the key reflation trade since the beginning of this year, it had a very strong move during the first and second quarters, and it came from a very oversold condition. It then paused all over the spring and summer and is now resuming its uptrend. We believe there's still the leeway to make it up towards early next year, up to the high 50s level. And our risk index here is not overbought yet and is turning higher, so that we would see the leeway to do so. The hourly, with the recent agreement that was reached with OPEC members, has been moving up quite rapidly. We could see it slightly overbought over the short term, so may see a bit of work here over the next week or so, but in general, it is still heading up. Now finally, on the reflation trade, just looking at it in reverse, we could look at gold. And gold basically doesn't like reflation and rising interest rates, nor a better economic perspective. And we can see that in the first phases of reflation, as the environment was still very defensive, it moved quite aggressively earlier this year. But our daily, since interest rates have turned in July, is showing us that we have been in a downtrend. Similarly to interest rates, similarly to the euro, we see a bit more leeway to the downside into early next year, possibly January and February, and we're not yet oversold. That said, over the very short term, the next week or so, we are possibly ready for a bounce, which could lead us back above 1200. In general, if you're interested in gold, start looking at it towards mid-January, early February, because at some point, you will see a correction on reflation assets and gold could make a comeback. Finally, a bit out of sync with the other assets, we look at the Dow Jones Euro Stocks. It was heavily impacted by a lot of uncertainties earlier this year, which still headed into a long-term downtrend. That long-term downtrend is not yet confirmed to be over, yet we could see that the daily is now looking much more promising. It has maintain a very tight range given Brexit, given the European banks, and given the Italian referendum. But its risk index is still quite towards the lower end of the range and would have quite some leeway to move up and be overbought again. And we could see that following the uncertainty which was taken out of the market with the Italian referendum, it's moving up quite aggressively. And it's not yet overbought. We would see a bit more potential over the next few days, possibly a bit of consolidation afterwards, but in general, we see quite a nice potential into the same timing points we see towards mid-January to the end of February. We wish you a very good week of trading. Thank you very much.